Hey, I hope that you and your family are doing well. My name is Bert Salazar, and last week I conducted a webinar called Five Reasons Why You Need Annuities in Retirement. And I cover the whole spectrum when it came to annuities and so forth. But the five reasons, just to give you a quick rundown on that, the five reasons are longevity. The fact that you really don't know how long you're going to live. You may live a really long life, or you may live a short life, or you may live an average life, and the impact that that would have on yourself and your family from a retirement standpoint. The second issue that is part of the reasons as to why you need annuities in retirement is the withdrawal rate risk. You know, if you take too much money out, then you're going to run out of money before you run out of life. If you take too little, then you're really not going to be enjoying your retirement life because of the fears of running out of money before you run out of life. The third reason why it's important to own annuities as part of your overall portfolio in retirement is the sequencing of returns. And this is one of the major areas that I deal with many of my clients. The fact that you really have no idea what the market is going to be doing at the time that you retire. And if you suffer losses early on in your retirement life, there's a very high probability that you're going to run out of money 11 to 13 years sooner than expected. So if you're going to have losses, it's better be at the end of your retirement life as opposed to at the very beginning. And that's why annuities play such a major role because of the things that they do. Then the fourth reason is inflation risk. You know, inflation is all around us. Inflation is a silent killer. Inflation is not tax deductible, so a 4% inflation rate can actually destroy the 50% of the purchasing power of your money in 20 years. And if you go out 30 years, it will destroy 2/3 of your purchasing power for the money that you have. If you had it today, then you wanted to factor in what can you buy with that same dollar today, 20 or 30 years down the line. And then the last one, but not least, is deflation risk. The fact that if you have a slowed economy and the economy slows down to the point that you may have a recession or a depression, then chances are it's going to create havoc on your retirement plan because of the fact that, you know, why purchase something today when you can probably buy it cheaper 6 months from now? So I cover all of that. But one of the major questions that I received, because I talked about the different types of annuities, you know, how do you engage in annuities? What companies are the best? And also what kind of payouts should you get? One of the major questions that I received is why do annuities provide such a better payout than any other retirement asset? And that's the one that I want to address real quick. And the reason for that is annuities are the only products in the marketplace that you can look at from a retirement standpoint where you will get as part of your payout principal, interest, and mortality credits. Now, we all know about principal and interest. You get that back, you know, any other type of investment. But what you don't get in any other type of investment are mortality risks. And the mortality risk is the ability, because it is an annuity, for an insurance company to determine out of a block of Americans living at some point in time at a given age, how many of them are going to die prior to mortality and how many of them are going to die past mortality. Let me give you an example. If you are 65 years of age today, and you put $100,000 into an annuity contract, into an immediate annuity, so you start receiving a guaranteed paycheck for the rest of your life, the way that the payouts are determined by insurance companies is actuarially based. Therefore, they're going to take a look at 10 million lives, people that are 65 years of age today, and they're going to do probabilities and actuarial formulas to determine how long they're going to live. So if a 65-year-old has a mortality of age 85, what that tells you is that 50% of that block, or 5 million people, are not going to make it to age 85. They're going to die somewhere along the way. But also 50% will actually live or make it to age 85 or live past the age of 85. So therefore, insurance companies are able to increase the payouts because they know exactly how many people are going to die on a given year. Now, they don't know if you're going to die, if you're going to be the one dying on that year, but they know out of the probabilities of 10 million lives, how many are going to die at any given point. And actually, they're experts at doing this, and they're the best as far as managing risk from a business perspective. So when you have an annuity payout, you're not going to be able to find any other way in which to maximize your payout unless you have an annuity as part of your retirement portfolio. How do you decipher which one to use? Well, do you want to cover just your fixed expenses? Some of my clients want to do that. Other clients and I have are a little bit more conservative. So not only do they want to cover their fixed expenses, they also want to cover their variable expenses. And then, we can do combination straddles, so we can determine what type of annuities may be best for you and your family, whether it's going to be an immediate annuity or a deferred annuity. And those are things that obviously we can address at some point in time in the future. Just wanted to give you a little bit of feedback on that, because I have been getting a lot of questions regarding mortality credits, and I just gave you a quick overview. I would go into a lot more detail with you and your family at a given point in time in the future. So if you have any questions, please feel free to call me. You can reach out to me at area code 786-766-1042. You can also send me an email at Bert, B-E-R-T, at bertsalazar.com, BERTSALAZAR.com. So I hope you're having a great day. Stay safe, keep your social distance, and I'll talk to you soon. Take care. Bye-bye.